Welcome to the Trimetric Roadmap, powered by Business Freedom Advisors, the podcast for business owners who want to grow their business and enjoy their life. Hey, I'm your host, Scott Landis, creator of the Trimetric Tracking System and author of Balancing Act. If you're tired of chasing success at the expense of your health, your marriage, or your peace of mind, you're in the right place. On this show, we help you track what really matters: business health, life quality, and leadership performance, all in one simple, powerful system. Because when those get out of sync, everything else starts to break down. Our goal here is to help you align it all so you can lead with clarity, scale with purpose, and finally enjoy the freedom you've been working so hard to create. And if it feels like no one's ever shown you how to pull that off, this podcast might just be the missing link you've been quietly searching for. Now, let's dive into today's episode. Welcome to the Trimetric Roadmap podcast with Scott Landis and my co-podcaster, co-host, Jeff Jacob. Today, we don't have a guest with us, Jeff. I'm going to interview you on behalf of our audience. We talk about the business health diagnostic all the time, which is under our Trimetric tracking system. The business health diagnostic, I like to call it a business valuation on steroids, because it shows not only where the inefficiencies are, where the leaks are, where the opportunities are for business owners, but also shows you your value, what somebody might want to buy that business for. We use weird terms like EBITDA. That's something that people that have looked at a business valuation would be familiar with, but otherwise it might sound like, what's EBITDA? So I'll have you break that down. And today's topic, we want to just dig into one little thing, which is recasting. So I'm going to just pick your brain, and I know you just got off a call, so let's put it in terms of a case study. So instead of just defining terms, tell me, like, you just got off a call, tell me a little bit of the backstory, and you were talking to a CFO at a company that was buying one of our clients' companies. Like, break it all down, just kind of give us the backstory.
Yeah, so this guy first he came to us wanting to work less and just find more freedom. And then through mostly you, Scott, working with him, he was able to reduce his hours down to just working 2 days a week without losing any of the profit he was making. His top line revenue and the profit actually increased a little bit through that. And then he wanted to engage us with getting into the financial aspect because he was getting offers for other people purchasing his business. And so originally, originally he was getting offered about $950,000 to sell his practice. And that for his organization, for his industry, what they do is they take the EBITDA and then have a multiplier based on how efficient the business is. And EBITDA is the earnings before interest, taxes, depreciation, and amortization. And so,
Aha, so it's an acronym. Got it. Gotta love
yes,
acronyms.
yes, and we can brainstorm letters to add to that, but that's what it is for sure.
Yes.
Yeah. And which Scott and I just got finished doing, and it was a fun thought experiment. But
Inside joke, people. Inside joke.
it's not jokes. We can be creative and funny sometimes. But the EBITDA really, there's an art to it. And what you're trying to do is to show potential buyers how much money they are going to expect to get if they are running that company.
So
And
it's
so
not just an art. It's an art also. It's art and a science. I don't want to ignore that. Is very fact based, very scientific process. But when you say art, there's an art to it. Explain that a little bit more.
Well, it's like when you're buying a house, there's the curb appeal to a house,
Mm.
and there's a curb appeal to a business. If I'm coming in and I'm running a business with a bunch of, employees who hate being there, they hate the work, they hate doing it, and the books all look wrong. And so there's negative assets, there's positive liabilities, and some of the cash flow just doesn't make sense. Which is a couple of our clients we've gotten in and cleaned up their books. It's surprising how much that happens. Surprising to me. But the curb appeal to that business is very poor. And so why I'm not going to want to spend as much money to buy that business because of all the headaches I'm going to have to deal with. And I don't really, potentially by looking at the books, I don't really trust that it's being managed well. But if you clean up the books, organize it correctly and in a way that actually makes sense, and then the operation, that's how streamlined is it? Um, how much work am I going to have to put into managing these people and this company for getting that profit out of it? The less work I have to put in, therefore, the better the company runs, the more money I'm willing to spend to make that money. And so the curb appeal, so to speak, is a lot higher for an organization like that. And that's where some
Got
of
it.
the art comes, is how do you present the truth?
I love the metaphor. I used to do flip houses. I know you've done that too. Real
Hmm.
estate investing, and there's different reasons to buy a house, right? So there are different people out there that are looking for a business that's a fixer upper.
Hmm.
There are people that are just looking for, I want to acquire a business that's got a great structure. It's kind of, I've got a portfolio of businesses and I need one that does XYZ. They're not looking for a fixer upper. So, depending on where you are on the buying side of buying a business, you might want the fixer. You might look for one that's like, holy cow, that you drive up to the house and you're like, ew, like great location, but what happened here? Is it a crime scene? Like that's what
Hmm.
you're looking for. You're looking for horrible curb appeal, and you're hoping it has. So that's the art, and then you go in and you check the foundation. You do an inspection. You have things. You want to look at the foundation and the structure to see what am I working with? Does it have the bones that I need? And it just needs to like be spruced up. That's a great opportunity for somebody who's looking to buy a business, flip it, kind of like flipping houses. You can buy a business, put some work into it, and turn it around to a business that is extremely valuable. And you can take that, you can increase your wealth very quickly with just pulling a few levers in a relatively short period of time and make a lot of money buying a business like that and selling it. When we are when we're representing a client who's wanting to get the top dollar for their business, we're looking at it from the other perspective as a seller. You want to take care of all those things that are going to make the potential buyers go, ooh, turn their nose up. The ones that are looking for, they're willing to spend top dollar on a great business that can provide them a good income. So perfect metaphor. Like if I'm getting it, then probably anybody can get it, Jeff.
Yeah, absolutely. And we're looking for a house right now. And if, we're looking, and we've had experience flipping houses and all that, but we're looking at different styles of houses. If there's something that needs a new roof, it needs, a lot of new flooring, all of that, I'm going to spend less to get that house. Same thing with business. If there's a lot of work that has to be put into it, I'm going to spend less to buy that business. If it's turnkey, ready to go, and it's just going to be cash flowing for me, then with minimal work, then I'm willing to pay a lot more for that money, because you either spend time or money, and most people don't have the time. Their time
Mhm.
is worth more than that. And so you have to spend more money for that time, really.
So if
And
somebody's listening and they are thinking, oh, I would like to buy a business, or I might want to, because we usually talk about people that we are representing and increasing the value of the business. We're not normally talking about buying and selling businesses, but you know, there's an adage out there: good exit planning is good business planning. So we live that. But if somebody happens to be listening who's looking in the market, maybe they're mergers and acquisitions, maybe they're just looking to buy a business or sell a business, would we be a good call for them to make? Would you be able to help them with the business health diagnostic? How does it fit for that person?
yeah, absolutely. Business health diagnostic, if somebody's wanting to sell their business, um, the process is really similar for that we bring people through, because what we learned through going through, well, when I got started learning exit planning, I realized that how you prepare a business for exit planning really is how you just maximize a business. And so, whether you're going to keep it and cash flow it, or if you're going to sell it and get that lump sum, both ways really are. very similar. And so what we do is we bring people through that process, look at the different levers that you pull to be able to maximize the business's value, but at the same time, what you're doing is maximizing the cash flow as well. But then the point with that process is you have the options. That's why we're business freedom advisors, is because you have that option to be able to have the freedom to make whatever choice you want. And you can just get in a good place for your kids to take over. You can get in a good place to sell, maximize what you get, or you can get it to a place where it's bringing you in more money month to month. So it really is the same process, very similar at least.
Mhm. Okay, cool. So thanks for going down that rabbit hole with me for a second. And now, okay, go back. You were talking about the current case that you've been working. So you kind of shared where we got to today, and then we want to kind of understand what this idea of recasting. So pick it up from there.
Yeah, so he got an offer of $950,000, and then plus his building, which was 500,000. So he got an offer for $950,000 for the business. There's really not a lot you do with the property to make that more valuable. So I put that on the side. But then when we got involved with the books, after maximizing, getting him down to 2 days a week and actually increasing his revenue and profit margin, then we realized that the books were a complete mess. And there's a reason why he was getting such a low offer for the business is because it just wasn't done correctly or in a way that made sense. So there were mistakes made in the books as well as it was just unorganized. And so what we did is we cleaned up the books, we organized it in a way that made sense, but then you have to take in, so that's the end of that process. But then um, you have to take in some of the fringe benefits, let's call them. So every business owner runs some sort of personal finances through their business. I mean, if you're legal, and I'm talking about legally, let's just assume all of that's done legally. So your personal expenses that could be categorized as business expenses, some of the benefits of business ownership, you put that through the business, but the new owner doesn't have to do that. And so you're supposed to, with an EBITDA calculation, that's what recasting the EBITDA is, take out some of those expenses to show what the new owner really is going to be profiting. And therefore they can put whatever of their personal expenses that they want to through it and out of that profit. So, how do you figure out what are really personal expenses? What are the things that are optional that the new owner isn't going to have to do? And you take all of those expenses out, and through recasting the EBITDA, through cleaning up the books, through taking out the personal expenses, we were able to raise his EBITDA up from, I don't remember exactly what it was beforehand, but raise that up um, the three times. We were able to, I think it was multiplying by three, that we were able to raise up his recast EBITDA. And then through that, because his business was more streamlined as well, before we got into the financial books, because it was more streamlined, it's only 2 days a week. It's, the staff's happy, all that. And now the finances are running well and organized. Because of all of those changes, it's more streamlined. It has that curb appeal we were talking about before, where this is going to be an easier operation to take on for a new owner. Because of that, the multiplier rose and up to the maximum for his industry. And so his
Okay.
every industry has a different multiplier. And his got
Mm,
raised from a 4 up to a 10. And
mhm.
so even raising up his income by $100,000 gets now multiplied by 10 instead of 4. So instead of being $400,000, that's that 400,000 times what, six? No, it
All
was
right.
100,000 as far as a
Let
million
let's
dollars,
back
so
up.
$600,000 increase.
Yeah, yeah. So let's back up a little bit because I don't know if it's a gift or a curse, but I have this superpower to make complex and complicated things really dumbed down to the simple. So, hopefully, if you're listening to this, it's a benefit that you have me here, like dumbing things down for my own use. And hopefully it benefits the listener as well. But okay, so back up a little bit because you are getting into the depth of it, which is power, where the power really lies. And I don't necessarily need to understand all of that as long as I have somebody I trust that does, right? And so I've got you, so I don't worry about it too much. But I do know enough to say, okay, let's back up. So there's the EBITDA. Okay, so let me put it in the frame of mind where somebody might be thinking on the early stages of, oh yeah, I need to sell my business someday. Yeah, I've heard of getting a business valuation. Don't I talk to a business broker about that? Like they might have some ideas. And they're thinking, okay, I kind of understand the term business valuation. And then most of the time when you start talking about people that are valuing your business, what would it be selling for? Like you would with your house, you talk to a realtor, they would do comps, comparables around the neighborhood, and they would give you a factor that they would use to decide for the by square footage what your house should be worth. Similar process, right? So I understand the valuation of my business is tied to EBITDA. So I want you to explain that a little bit more. And before you go into what's the difference between that and recasting EBITDA, because I think even people that have been thinking about selling their business for a while, like our client, he's been working on selling his business for years and he never even heard of recasting EBITDA. He's like, what the heck is this thing I've been missing my whole life? So break those two things. Just distinguish the two things, like what the preliminary understanding might be versus when you start to bring in the recasting.
The preliminary EBITDA versus the recasted EBITDA.
Yeah, like somebody who says, "Oh yeah, I've heard of EBITDA, and I know that that's tied to the value of the business." But what is this recasted EBITDA? Like,
Yeah.
how does so just to make it more distinguished? Because I think it got the way you were explaining it, like all of these things and like different industries, it got
Mhm.
all blurred together. Where I want to kind of compartmentalize it for again the simple-minded
Right.
like myself.
Okay. So an EBITDA, you basically take the profit that's on your tax return for the business only. You take that
Mhm,
profit and then you have to put back in the rest of the letters. So that's your earnings that you've reported
mhm,
on your taxes. So that's the E. Now you take the beta. And so
mhm.
before you take those earnings before, and so you add back in the interest payments that you've paid, um, not the payments, not the principal payments, but the interest payments,
Okay.
the taxes that you paid,
Mhm,
EBIT, the depreciation that you've deducted,
mhm,
and the amortization you've taken out.
mhm.
And so
Okay.
you bring all four of those, you put those back in. So if if you reported 100,000 on your taxes for the business, and then you do 100,000 plus whatever those four things add up to, and that's what your EBITDA calculation is, and
Okay, so
that's
this is
what gets
helping me.
multiplied.
Okay, gotcha. So when I file my taxes, I want that number that I'm being taxed on to be as low as possible. So I'm
Right,
taking out that's why I go to my accountant, that's why I go to my CPA, because they're like supposed to like find all these things that make that number as low as possible. That's what I think I'm paying them for anyways.
right,
And so I get that number as low as possible. And that doesn't help me when I'm going to look for a personal loan on a car or a house. That doesn't help me there, but it helps
right,
me like to pay less to the IRS. And it also doesn't help me when I'm figuring out what is the value of my business. So if I was thinking, oh yeah, my taxes say I made this much money, no, there's so much more you can add into that. The depreciation, amortization, the taxes, insurance. So you are looking at all that and putting it back in to get the real more profit, more value based number. That's the EBITDA. Okay, got it.
right. And then, so that's what the actual profit is from the company, the operational profit, basically.
Hmm, hmm,
And then to recast it, you have to take out some of the fringe or optional expenses that a owner wouldn't have to take on, but could, operationally, you keep marketing in there, you keep IT, you keep those kinds of things that you don't technically have to, but it's right to do. You keep those things in there. But then you add back in, so that number that you get with the EBITDA from the taxes, adding those four things in, that you get that number, and then to recast, you add in some of the fringe elements, um, car loans, airplane leases. That was this last guy, uh, and your personal cell phone that you use for business, travel expenses, those kinds of things. There's a lot of them that can be
Meals,
categorized there.
entertainment. Yeah.
Uh-huh. You add that stuff back in to raise up, okay, what is the actual profit? And so a new owner might want to do marketing, but isn't going to be, wouldn't have to go travel and write off a trip to Italy.
Hmm.
They wouldn't have to write that off, but they could. That's an
Hmm.
optional kind of fringe benefit of owning a business. Those things get recast back into the profit so that you get to a new profit level.
Okay, perfect. I think that is, and then the last thing is you mentioned each industry has its own multiplier. So once you kind of understand EBITDA, recast EBITDA, okay, I get it. I add all these things back in. Then there's this multiplier. Just spend 60 seconds on that, the multiplier.
Different industries, um, nothing has intrinsic value. What you, everything is worth whatever somebody's willing to pay for it. And so different industries have different values to them based
Oh,
on different elements.
so metaphorically to our house thing, like you could have the exact same house in like 10 different neighborhoods and get 10 different values for it, right? If you take it, it's in Southeast Portland or Malibu, same exact house, totally
Mhm.
different value based on the factor of location. So it's sort of like that.
It's sort of like that. Yeah. The market is different for different industries. And it could be that there's more people that want into that industry. And so the multiplier goes up.
Mhm.
Like with a house, you might have a house with a mother-in-law suite, but you have to find somebody who wants a mother-in-law suite. And so
Right.
there aren't as many people that want that. And so therefore it could be worth $1 million to somebody where that's really valuable to them, but for people that that's not valuable for, and then it's worth less. So you have to find somebody who's willing to pay a certain price for it. And businesses are very similar thing, and different industries are different with that. Yeah.
So let's start to close out the episode here. I want to give people action steps that they can do. A couple of things that are top of my mind, and then you can fill in any gaps, Jeff. But I want you to go to trimetricquiz.com. If you're listening, you're like, gosh, I would love to be engaged with business freedom advisors. What's the first easy step? You can take 10 or 15 minutes, fill out a quick quiz. It puts your name and email and phone number in our system, and we'll follow up with you. We'll give you a trimetric snapshot of where you're at from a leadership, business health, and life quality perspective. That will lead into the business health diagnostic. So that's the easy thing, trimetricquiz.com. What's another action that you would recommend people do today?
Well, I would highly recommend the trimetric quiz. That's incredibly valuable. And we could also do a BHD light for people that just
Mhm.
shows based on just a few different numbers, we can put those in, and over our experience, we've figured out generally what that can end up with for people. And so what difference that can make.
Awesome. And then what's the minimum requirement that you need for the to do a BHD light that somebody could send to you?
Ideally, I would have last year's profit loss statement and balance sheet.
Okay, cool. All right. So either way, to get started with us, we want you to go to trimetricquiz.com. That'll get the ball rolling. And then, Jeff will get you those or get those documents from you, and we can do the BHD light version for you. It doesn't take very long, and it's going to be hugely valuable to you. So thanks for listening to the Trimetric Roadmap podcast. Jeff, thanks for being my co host with me and being able to be an expert on financial stuff so I don't have to. And we do this every week, so continue to listen and subscribe, and we'll be in touch at trimetricquiz.com. Talk to you soon.
Thanks for listening to the Trimetric Roadmap powered by Business Freedom Advisors. I've been your host, Scott Landis. If you're growing a business but something still feels off, you're not alone. That's exactly why we created the Trimetric Quiz. It's not a personality test, it's a powerful diagnostic tool that shows you where you're in alignment and where things may be silently slipping off track across your business, life, and leadership. It only takes a few minutes, and the clarity you'll gain is a game changer. Go to trimetricquiz.com to take the quiz now before the cost of staying stuck gets any higher. Until next time, stay focused, stay aligned, and keep building a business that truly supports your life.